Hello everyone, I am Aanchal Nigam from Department of Management, Schools of Management Sciences, Lucknow. Today's topic is Securities Exchange Board of India, its intro, objectives and functions. It has been included in the subject that named as Financial Markets and Services of MBA Specialization Finance. The main aim of including this topic of SEBI and to have developing an understanding of SEBI is for having an idea about Securities Exchange Board of India's functioning and how they are working to protect the interests of investors as a whole. The next objective, if I talk about on the part of students, SEBI is an important part to know, it is an important topic to understand because of the reason that students will develop an idea about Securities Exchange Board of India, and if they will be able to understand the organizational structure of SEBI, they will be able to become a part of SEBI in upcoming future career if they opt as an option to work with the SEBI, if they will get a chance to work with the SEBI basically. Another objective of including this topic in this subject is to provide a skill of knowledge that will be developed in the minds of students for SEBI as a whole. After studying this topic, the students will be able to understand about the SEBI's importance in our country and how the SEBI's are regulating the secondary market or the stock exchanges as a whole. They will be able to understand the regulations that are protecting the mutual fund schemes that are prevailing in the market. So, moving on with this topic, first of all we need to understand about Securities Exchange Board of India. Basically in 1988 it was a non-statutory body for regulating the securities market, but in 1992 the government issued an ordinance for providing the statutory powers, and SEBI became the statutory body in 1992. SEBI is very important, Securities Exchange Board of India, to regulate the working of all the exchanges that are been processing, that are been keep doing the regulations in the Indian capital market to give a protection to the investors against their money. Basically the headquarters of SEBI is in Mumbai. There are so many regional offices also of Securities Exchange Board of India, that is in New Delhi, Ahmedabad, Kolkata, Chennai, and so many other places are there for its offices. The basic purpose of SEBI Act is to protect the investors' interest, to promote the securities market, its development, and to regulate the securities market as a whole. All the stock exchanges, whether it is Bombay Stock Exchange, National Stock Exchange, Bombay Stock Exchange, Sensex, Nifty 50 have to follow the SEBI regulations. SEBI is a statutory regulatory body that has been entrusted with the responsibility to regulate the Indian capital markets. SEBI has been working from the very beginning to improve the procedural activities for investors to protect their interest, like they want to give the broad basing to the stock market by having an interaction and regulational relation with more stock exchanges, and their possible integration also wherever it is necessary. SEBI wants to improve the trading and payment settlement system also. That's why it removed the Badla transactions and included T+2 system. After removing the Badla transactions, because there was so much of malpractices, unofficial insider trading and many more things was being done in the end of decade of 1980s and 1990s. That was the reason why SEBI introduced such kind of programs. For upgrading more, registrations were done for the brokers and well as their associates. If I talk about the objectives of SEBI, well, there are so many objectives to introduce SEBI as far as RBI is concerned. Reserve Bank of India introduced SEBI and along with the government because of the only reason to secure the interests of investors. The first point, if we move on with the objectives only, it is regulation of stock exchanges. As I already told you all that whether it is BSE or NSE, both have to follow the regulatory authorities, the regulations that are being inculcated in stock exchange market. Next objective, if I talk about, that is protection to the investors. SEBI is very much interested in providing the protection to the investors because of the reason that if the investors will not find that particular secondary market is safe for their investment purposes, then they can go against investment making in the SEBI, in the stock exchanges, whether it is Sensex or it is Nifty 50. The proper analytical tools, different software platforms, various stock exchange related financial intermediary companies are being provided by SEBI to the investors as a whole for having a kind of interaction indirect that can be with the investors as a whole. SEBI has also supported the over the counter market or OTC market because of the reason to list more smaller companies as a whole. They also provided a kind of code of advertisement to the mutual fund companies for the only reason that whether they are existing or they are new mutual fund companies, they need to understand that mutual funds are subject to risk, and these market information are very important to give to the investors before they invest their money in any kind of scheme, whether it is equity mutual fund scheme, debt mutual fund scheme, solution oriented mutual fund scheme or any of the mutual fund scheme. It is important for the investors to have full knowledge, disclosure towards this particular thing. They made it essential for mentioning their fairness in disclosing the risk factors that are included in the mutual fund companies. SEBI also keeps a check over the insider trading as our next point because of the reason, as I already mentioned, that in the end of 1980s and 1990s, there was an increase in the malpractices, price rigging and other things that keeps on moving down the market of securities, and investors were in fear, and there were so many scams that were happening at that time when SEBI's regulatory act was not that much active as compared to today's SEBI. Insider trading is basically illegal. It is basically a kind of exposure of confidential information to the outsiders before keep it in general public. All the confidential informations need to be keep with the companies only. If they are providing it to the other people, then that is totally illegal and against the regulations and rules of Securities Exchange Board of India as well as Government of India. The next objective of SEBI is to have a control over the brokers. For controlling the brokers, SEBI inculcated an activity of more registrations for brokers, sub-brokers and their associates. For SEBI also tries to do something directly by way of investors education. It has a few investor guidance and advertisement that has been published in a book, that is Investor Grievances, Rights and Remedies. This book contains all the guidelines that are being related with the investor grievances and their full rights and how they can solve it by means of SEBI. Going on towards the next slide, there are some of the powers in the hands of SEBI, as now it is a statutory body. Still there are so many things that are not in hands of SEBI. It is totally in the hands of the chairpersons of the government who are undertaking the activities of SEBI. Basically the powers of SEBI are of three types that can be a quasi judicial, quasi legislative, and quasi executive. Basically all these powers are being understood by this all three functions or powers. The quasi judicial is related with hearing and making judgments towards investors if they are not fully satisfied with the working of the companies, through which the fairness, a kind of consistency will be there, a kind of transparency will be there in the working of the financial intermediaries, as well as for the investors or dealers. It will be easy to understand the bylaws that has been given by the stock exchanges. Next I mentioned about quasi legislative. Basically the quasi legislative is all that is related with the different kinds of disclosure and other things. One of the thing, as I already mentioned, is SEBI LODR. Now what is LODR? It is listing obligation and disclosure requirements. Basically all the regulations that are being in need to be disclosed by the members, officials of financial intermediaries that are taking care the investors' business of investments or dealings. They need to disclose all the things, all the requirements that are being undertaken by SEBI as a whole. So, at last the quasi executive, that is related with the filing of cases, inspecting the books of accounts and calling of for periodical returns from recognized stock exchanges. So, these three are a base and all the other points are the powers of SEBI. So, the first is to approve bylaws of stock exchanges, second is to require the stock exchange to amend their bylaws, third is to inspect the books of accounts and call for periodical returns from recognized stock exchanges, it may be BSE, it may be NSE. Fourth is to inspect the books of accounts of financial intermediaries, whether they are working in a proper manner and whether they are following the T+2 settlement system of payment or not. To compel certain companies to list their shares in one or more stock exchanges also, because of the reason that most of the companies are making profits out of it. Next is registration of brokers, whether they are sub-brokers, associates or anyone, the registration is required as per the SEBI regulations are being mentioned. After understanding the powers of SEBI, it is important to understand the functions of SEBI as well. First function of Securities Exchange Board of India is, it is a issuer of the securities. Companies that issue securities are listed on the stock exchanges. They issue shares to raise funds. From these funds, they will be able to make it available for more productive use further to the investors as well as for their own development. So, issuing securities is the basic requirement in the stock market that has been undertaken by SEBI as a head or a management company, management regulatory company, office. Next is protects the interests of traders and investors. SEBI, as I already mentioned, that it used to protect the interests of traders and investors as a whole, because of the fact that the capital markets are being functioning just because the traders exist, and if the traders are doing their business, it is the responsibility of Securities Exchange Board of India to have a keen eye over the protection of these traders and investors or dealers as a whole. Next is financial intermediaries to be checked on by the SEBI. SEBI acts as a kind of mediator in the stock market to ensure that all the market transactions take place in a secure and a smooth manner. It is important to understand the value of SEBI as a whole, because if there will be no regulatory party, then financial intermediaries can do whatever they want to, and maybe they can cheat the investors or traders or dealers in terms of transaction costs, in terms of any kind of different kinds of dealings that has been taken between that has been undertaken by the financial intermediaries with the dealers or public or investors. So, it is very important. There is a web based centralized redressal system that is known as scores. Well, basically the full form of scores is related with the SEBI complaint redress system. This scores is to handle the investors' complaints that are being given by them in terms of any kind of investment or any kind of further processing. Moving on further, there is organizational structure. Organization of SEBI includes so many departments as well as the advisory committee. There are the departments like primary market departments for handling the primary market section, issue management department, intermediaries department for handling the brokers and all that, issue management department to manage the issuing of shares or securities in the market, secondary market department to handle the stock market, institutional investment department to have a watch over the investments that are being done by various financial institutions or private institutions as well. All these departments are being handled by a single advisory committee having different members. Well, apart from the department heads, the senior management of SEBI consists of a board of directors who are appointed as, there will be one chairman that will be nominated by the central government of India or union government. The 2 numbers from the Union Finance Minister of India will be there. After these 3 members, there will be 1 member from the top officials of Reserve Bank of India. These 4 members along with 5 members that will be nominated from the officials of central or union government of India as a whole to make this infrastructure or the organization of SEBI. After understanding the organization of SEBI, it is also very important to have a kind of look over the mutual fund regulations that are being mentioned by Securities Exchange Board of India. Well, if we talk about mutual funds, basically the mutual funds are managed by AMC, that is Asset Management Company. These asset management company are need to be approved by SEBI only, and these are the trustees to monitor the performance of various mutual funds. They are the holders of the interests and the securities that are being or shares that are being invested in these mutual funds schemes. There are 5 schemes of mutual funds as I talk about. These 5 categories are equity schemes, debt schemes, solution oriented schemes, hybrid schemes, and other also schemes. There are so many schemes that are coming up day after day. So, in mutual funds, these are the basic schemes. SEBI has also made few policies laid down guidelines for the mutual funds in order to safeguard the interests of the investors. These guidelines have been laid to bring a kind of uniformity in the working of the similar mutual funds scheme, which will help the investors as a whole to make their investment decisions more clearly. As I already told you about mutual funds that are being handled by asset management company, there are some of the regulations also by means of on the part of SEBI, and those regulations are a sponsor of mutual fund scheme or a group of company or an associate which involves in AMC of the fund cannot hold these following things. What those things are? The first point is that 10% or above of the voting rights and shareholding in asset management company or any other mutual fund scheme should not be there to these sponsor or to these part of group of company or any associate. The second one is an asset management company cannot have the representation on the board of any other mutual fund through any other means. The third point is that shareholders cannot hold more than 10% of shares both directly and indirectly in asset management company of mutual funds. So, basically these are the things that need to be understood by the mutual funds sponsors also, because if they will not be able to follow the rules and regulations of SEBI, then SEBI can have a hold over these mutual fund companies. They can be able to have a call for meeting with these mutual fund AMCs. If any company wants to be a sponsor or if anybody wants to be a part as a mutual fund for SEBI, then they have to fill out a form that is known as Form A from 25 lakhs will be the fee that will be charged by SEBI. That is a kind of registration fee basically, and if the company who wants to become the mutual fund company, if they have eligibility criterias to be filled out and if they have trustees or board of trustees and they have asset management companies like for trustees as well, so they can become the mutual fund company and the AMC will be approved by SEBI easily. At last, we need to understand the COVID-19 impact on SEBI. SEBI said that listed entities should evaluate the impact of COVID-19 pandemic on their business performance and financial both quantitatively and qualitatively to the event extent possible and disseminate the same to investors as well. As I already said that SEBI has to maintain and they have to work for people, whether it is COVID-19 or whether it is any kind of war situation that will be happening in the further future in our country. So, SEBI has a right to understand the working as a whole and they need to evaluate the impact, financial performance also, and the companies have to face and have to give the dissemination to the investors at the same time, because of the reason that if they will not be able to present themselves properly in front of the public, then there will be a kind of mislead or misworking with the situation. At last, I would like to thank you and have a nice day.